Hello, good morning. Happy Wednesday, everyone. My name is Justin Nimergood. I am your host of the Real Estate Rockstars podcast. Today, we have an exceptional guest on. He is dedicated to helping buyers, investors, and homeowners secure the right financing to achieve long-term success in real estate. Paul Anderson is a seasoned mortgage professional with over 2 decades of experience and currently serves as the producing area manager with Success Lending. Based in Boise, Idaho, Paul has been in the mortgage industry since 2000 and is known for providing strategic financing solutions tailored to each client's unique financial situation. His expertise spans jumbo financing, government loans, including FHA and VA, construction loans, refinancing, and working with self-employed or complex income borrowers. His approach emphasizes education, transparency, and long-term planning, helping clients make confident, informed decisions. Throughout his career, Paul has worked closely with both homeowners and real estate investors, positioning himself not just as a lender, but as a trusted advisor focused on building lasting relationships. His commitment to professionalism, personalized service, and execution has earned him repeat clients and referrals across multiple markets. At the core of Paul's work is a belief that human connection still matters, especially when navigating one of the most important financial decisions of a lifetime. Paul, without further ado, welcome to the show, sir.
Wow, Justin, thank you. That was a lot. I don't know if it's all true, but that was a lot. Thank you. Appreciate it.
Well, obviously well accomplished and rightfully so. So, before the show, we were just talking a little bit about kind of what we wanted to tee up, and I wanted to jump right in if we could with, the market that we're staring at right now. Give us your perspective of the market, where it is today and sort of where you see it heading in the next 12 to 24 months.
Yeah, that is a loaded question today. Every day is a new day, so it's kind of like Groundhog's Day. I think and as we talked about earlier, real estate is local. So I think your real estate market's going to change. On the lending side, I think that we're going to start seeing some improvements there. They will be modest and they will be over time. Obviously, with the situation that are going on around the world, specifically in the Middle East, that has rattled the bond markets and the bond investors the last 3 weeks. So leading right up to that, we were really starting to see some pretty good improvements in rates. We had a bad weekend and we reset. So I think all those things aside, over the next 12 months, we should see rates stabilize and improve. And I like to tell people when I say improve, everybody that I listen to, the economists, everybody in the market thinks if we get into the mid fives, that's probably where our floor is going to be for a while. And I know for a lot of people, that's a hard number to digest, but historically rates in the fives are actually really good rates. Obviously we have to get the cost of living and some of the other daily expenses down as well. But what I'm seeing is we'll probably have rates hopefully in the mid fives by the end of the year, maybe by the end of Q1 next year.
Oh, wow. That would be fantastic. And to your point, for those that have actually studied the market, they understand. I mean, if you look at the 80s, that was double digits. So, be thankful that it's even in the fives, I guess. I think we got spoiled for a couple of years there. So
we did.
So, as we look at this market, and it's an evolving market, this is also kind of a loaded question, but AI, everyone's talking about AI right now. I would love to hear your perspective of AI and how you see it sort of transforming or shifting maybe the mortgage market.
So we've seen a lot of interruption with AI on a couple different forms. Obviously, for a lot of us, AI has created great tools to do things much more efficiently. And the mortgage market has seized upon that too. So we are seeing more AI integration into our daily mortgage operations. Some of it on the front end, on the sales side, when you go to do a mortgage application, we're seeing it some on the back end in our operations side. So it is definitely having an impact. I think the one thing though is, and it'll be interesting, I'm a little bit older and you talked about the human connection side. I think AI is great because I can have AI doing 5 or 6 different tasks so I can enjoy this time with you. Mm-hmm. But let's never lose focus on the fact that I truly believe that everything is human driven. So if we give up too much control to AI, it won't need us anymore. And we're seeing that in some industries where AI and robotics are replacing the human element, and they've commoditized it. So I think for all the good, there are some downsides to it, but it's definitely impacting the mortgage industry. You're seeing the big players use almost an AI application from start to finish.
So who does the onus fall on then, right? I mean, does it fall on us as the individuals where our jobs are and our tasks and whatnot are being replaced, or does it fall on the leaders that are driving these AI initiatives, or is it somewhere in between?
I think the leaders that are going to drive it and the business owners that are driving it are going to drive it because it makes sense for them financially. Um, huge financial gains. I think where we have to stay focused is, we all have to get up and, at least in my belief, we all have to get up and work for a living and go to work every day. So I think find ways to integrate AI into your day. So the mundane menial tasks that you typically do, find a way to implement it that way, but don't lose the human element, because once you've lost that, people don't need you anymore. And so your expertise, I mean, a lot of the counseling I do with people, they could probably go to Chat or Gemini or Grok and get similar counseling, but they're not going to get the nuance with it. And also the counterpoint when you're going through a negotiation. So I would just say you've got to be aware of it, use it where you can, don't run from it, but don't let it take over your business.
Well said. And I do tend to agree with you. There's never going to be a replacement for human contact, human connection, right? And I think the sooner we can realize that, but also acknowledge that AI is here and it's here to stay. Adopt it, accept it, but also know, our role as a human in providing that direct connection is still important nonetheless. So
huge, yeah.
You, as I shared with your bio, you offer a variety of different types of loans and financing, right? I want to focus for a moment, if we could, on the complex income borrowers. Okay. I think that's an interesting one. Maybe could you share a brief story with us? You obviously keep it anonymous, but about a situation where you had a complex income borrower, and what was the situation, and how were you able to get through that? Because a lot of our listeners out there, are either first-time home buyers or in probably a similar position where they don't think they really are qualified to buy. But obviously, if they work with good quality professionals like yourself, you have your way. So I'd just love to hear a little bit more from you about that.
Yeah, I think it all comes down, and this is back to where that human element, and hopefully my, almost 30 years of experience is worth something. But, for your first time home buyers, there's still a lot of misconceptions out there. I've got to have 20% down. I've got to have a 720 FICO score. I've got to have all those things. Not the case at all. We've got a lot of loan programs out there for first-time home buyers where we can get them down payment assistance. They have to come in with a nominal amount down. We can go down to a 620, maybe a 580 score, depending on the loan program. So there are ways to do that. For the self-employed borrowers, that area of lending has gotten so much dramatically better over the last few years. So prior to the meltdown in 07, 08, everybody said stated loans, they were like the devil's child. Stated loans had been around since the 70s. And they were designed at that time, they were designed for self-employed borrowers who had the ability to put the money down and had good credit. And they could show, I've owned my business 5, 7, 10 years, but this is how I do my taxes. So I write everything off so I don't fit into a standard conventional conforming guidelines, and I fall outside of that. So those programs were around forever, and then somebody found out a way to manipulate them, and it went wild, and it hurt our market. Well, those loans never truly went away. So you want to talk about a good example, especially in real estate. I've got a friend who, she is a realtor developer. Her husband's a developer builder. They want to buy a home. They send over their taxes. They're reporting some income, but not all. Just simple math on their taxes. It showed that they made less than $12,000 a month. when we averaged out and did the standard formulation for conventional or FHA financing. I said, let's look at your bank statement for your business. They're builders, big deposits in. We go in, we adjust that income. We run a bank statement analysis. Now their monthly income is over $526,000 a month. It's radically different.
500 and what did you just say?
$526,000 a month because of the way they calculate the income.
Oh my goodness.
We had one that funded on Monday for a friend of mine who is a property manager, successful business, writes almost everything off on their taxes. So on his income, it shows that he makes just a little over $9,000 a month. Couldn't get him there for the home he wanted. And the guy's worked hard, has a great business, makes great money. We flip over to the bank statement loan. He's making $87,000 a month, and we closed on his loan on Monday. And we actually got him a really, really competitive rate too. So that's the other thing. People think that they're more like private money way out of market. They're not. They're competitive rates, they're competitive terms. So it's the creativity, but it's having those conversations. And and for these guys, it's thinking outside of the box and educating them on how the process works. And so those loans over the last 5 years have come along so far, and they're so much easier to do than they were 5 years ago. And they're very competitive in the marketplace today. So for self-employed people, there's a lot of options available that they may not be aware of.
I hope all our realtors and real estate professionals out there just heard that. That was an absolute masterclass that Paul just dropped for us. And I'll tell you, Paul, I was one of those, right? Great credit score, making great income, but I write everything off, smartly so. Don't want to overpay on taxes. Right. And so years ago, when my wife and I went to buy our first home, it was like, well, sorry, we can't use your income. Like, right. Really? Like, yeah. So that's huge. That's huge for all our self-employed individuals out there. It's absolutely a game changer. Now, I know when we went through the process, and it's probably changed since then, but it was like you had to have 2 years of proof of income. Is it still a 2-year rule?
Pretty much. And there are ways. I mean, Freddie Mac has a thing where if you've owned your business for 5 years, sometimes we can look at 1 year's tax returns depending on things. But for the most part, a good rule of thumb is you either have to be in your line of work or have your business for 2 years and be able to show taxes if that's the route you want to go.
Makes sense. That makes sense. So we talked about a complex situation. Maybe what is one of your highlight deals that you've had over the last 12 months, let's say, something that you're just like extremely proud of, that you got across the finish line, and that you're like, candidly, we have a better product than a lot of the market, with this one.
Probably to that point, for the most part, so like the loan I was talking about, a lot of the self-employed stuff, those are called non-QM loans. So they fall outside of standard conventional. So anybody wants to look that up, Google, chat, look it up. But most of your banks don't offer those. They offer products that they can sell back to Fannie, Freddie, and HUD. Mm-hmm. So FHA, VA, standard Fannie, Freddie products. But as far as deals go, I mean, when you work with a first-time home buyer, it's always exciting to see them start their path to home ownership. Mm-hmm. But for me, one of my sweet spots is a lot of times working with the investor, or taking that first-time home buyer, especially when they're young and they're like, you look at the world we live in today, it's more expensive than it's ever been. I live in a market where our housing is pretty overinflated. So we're talking to young people about, this is not your forever home. This is your launch pad. So showing them how you can buy this home today, and in a year's time, if you want, you can convert it into a rental. Showing them, I do this with, well, here's a good example. I've got a gentleman. He is a younger veteran, great guy, hardly ever around because he's always getting called out everywhere. But he bought a fourplex. And so he used his VA loan, got 100% financing on it, used the rent from the other 3 units to be able to help qualify for the monthly, because being in the military, he's not getting rich. Mm-hmm. So now he has a fourplex that cash flows a little bit, but his goal is every couple years to buy another fourplex. And what he will have to do is, when that time comes, we will refinance him out of his VA loan that he's in. We'll put him into a conventional loan or maybe a bank statement or a DSCR loan for that property. We get his VA entitlement restored, and he can go out and buy another fourplex using his VA loan again and keep his out-of-pocket costs down. So,
wow.
And he's a young guy doing amazing things, supporting our country. So you can't help but root for a guy like that. But he's got a plan. And so, and I'm a big believer in wealth through real estate. You have to be diversified, but real estate is a huge holding to have in your portfolio.
Absolutely. I mean, real estate, if you look at a lot of the most successful people out there that I'm sure we've studied or we follow and watch their podcasts and whatnot, they all of them emphasize real estate as being a core part of their portfolio because there's no more of it being made. I mean, it is what it is, right?
It's only going up in value, everything I've seen.
Yeah. Well said. All right, Paul. So we're gonna shift gears here to kind of our final segment of the show. Okay. And I'm gonna ask you a couple zingers. Do your best, but let's have some fun with it. All right. So imagine it's your last day on Earth, and you can only preserve 3 items in your time capsule. What are those items and why?
Oof! Wow. I'm old, so and I'm not the most sentimental guy. So, but probably pictures of my family and my kids, because I don't know, is my phone going to work where I'm going? So something tangible that I can hold on to, and then it would probably 3 things. So my family photo album, my dad's military uniform. So that's always meant a lot to me. Boy. And I'm a minimalist guy, so this is a lot of stuff to take with me. I don't take this much on a trip. Oh gosh, what would that be? If I could take a video of my daughter's orchestra performance, that would be those would be the things. So hopefully they've still got DVDs wherever I'm going.
I'm sure they do. I'm sure they do, and more. Or everything's going to be streaming in the cloud somewhere, right?
There we go. Yeah.
But that's great. Okay. And then the final question for you is, what is your definition of a real estate rock star?
I think for me, and so I'll probably preface a little bit. I started working in my dad's real estate brokerage when I was 8 years old. He had a Century 21 brokerage when I was a kid.
Oh, wow.
So I've been around it for as long as I can remember. I think that rock star is that person that gets up and goes to work every day and helps people. It's not the Instagram person. It's not the person, driving the fast, crazy cars. It's the people that get up and go to work every day and make home ownership possible for people and give them good, solid counsel and advice and put them in a good position. To me, that's a rock star.
I couldn't agree with you more. As someone that has social media, but I don't overindulge in it, certainly. And I'm a big believer of, Jim Rohn's saying that if you help, people get what they want, you'll absolutely get, everything you ever wanted and dreamed of. So, well said, Paul. Now, Paul, where can our listeners and our subscribers, where can they find and connect with you?
I am all over social because it helps me grow my business, obviously. But I would say if you Google Boise Lender, so I'm in Boise, Idaho, and that's BoiseLender, Boise Lender, that will pull me up. But you can go to my website, verticalfundingcapital.com. That's where we do a lot of our larger projects. I've got social handles on all the platforms at Boise Lender. So I've got a great marketing assistant who makes me look a lot better than I probably am and a lot skinnier than I really am. So, yeah.
Well, that good. Kudos to you and kudos to your system, because getting a Boise Lender, domain and owning the handles, if you will, that's pretty forward thinking. That's going to be valuable for years to come. So good for you.
I've had it for quite a while now.
Amazing, Paul. Well, folks, there you have it. We have had another wonderful guest on. Absolute masterclass today. Can't say enough and can't say thank you enough to Paul. Folks, we'll be with you again, same time, same place next week. Again, signing off from the Real Estate Rockstars. Thank you, everyone.